The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from a little thing we like to call this here Options Insider Radio Network. Hot off the heels of our 300th episode spectacular. I don't know about you guys, but I am still exhausted from that mega extravaganza. That was a lot of fun. If you haven't had a chance to check it out yet, listeners, I encourage you, go find it wherever finer podcasts are purveyed, iTunes, our website, Stitcher, Aha Mobile, built into your in-dash unit on your streaming mobile application of choice. Whatever the case may be, go find it, check it out. It's kind of fun. Doing a little bit of reminiscing in the 3+ years of the Option Block and all some of the fun stuff we've covered, and perhaps some of the not so fun stuff too, and some of your great comments and questions and memories as well. It was really fun. Check it out, episode 300, if you haven't already. Pretty fun stuff. It doesn't mean episode 301 won't be fun. No, we're going to have a lot of good fun. Just always fun to look back every now and then and see where you've come from so that you know where you're going. And speaking of where we're going, we're joined by the usual cast of colorful characters today. Starting off, let's go in order of... Actually, I don't know who's closer, you or Tusaw, so I'm going to flip a coin and say Tusaw. We're going to start off, the man beaming in from the lovely principality known as St. Charles, Illinois. He is Uncle Mike Tusaw from RCM Asset Management. Mr. Tusaw, welcome back to the program, sir.
Always a pleasure to be here from the great principality.
The Duchy of St. Charles. So are you still basking in the glow that is episode 300?
I'm basking in the first 299 as well. How can you not bask in such a wonderful, successful thing? And I mean that. This show has been an amazing success, and it's reached a lot of people, and it's just an unbelievable thing.
It's always fun to do a little basking every now and then. Speaking of basking, he is known to bask in maple syrup every now and then when he takes the little forays over the border into Vermont when he's not basking in butter sauce with all of his lobsters. He is none other than the rock lobster himself. Good old Andrew Giovinazzi. You like how I brought all of New England into that metaphor there, Andrew?
You hit the high points, lobsters and maple syrup. That's pretty much all we do here.
That's pretty much it. Connecticut's not really known for much except for insurance and Rhode Island.
Hedge funds.
Yeah, hedge funds. You're right. And I can say that because I am a born nutmegger, so I can mock my own kind. But yes, not too much else going on. What else is going on in your neck of the woods, Senior Rock Lobster?
Besides my least favorite weather pattern, which is freezing rain, Maine is like a sheet of ice. I was trying to pull down my friend's driveway, and the whole driveway, it's a hill that goes into the main road. So once the car starts going, it just goes into the main road and you can't stop it. It's a little freaky. So I actually had to drive basically on his lawn in the snow so I could control my speed onto the highway.
So is that what they call the one
or
road?
I would have been some sort of tin can. I would have been on one of our own lobster products, but in a crushed can.
Is that what they call the one road in Maine? It's the main road that goes throughout all of Maine?
Exactly. It is only, luckily, I keep saying Maine is just a third world country with good roads.
And last but not least, speaking of beaming in for the hinterlands, we are joined by none other than the Viceroy himself, Mr. Alex Jacobson. Not beaming in from the great OXHQ. No, he is beaming in from Casa Jacobson, a.k.a. the home of the Viceroy. And that's perhaps why he sounds so crystal clear today, listeners. Never really heard Alex in all of his glory until he joined us today on Skype. Alex, welcome back to the show, and we need this Skype connection more often.
Yeah, well, it's good to be here today. I'm home with the robe and slippers, with the dog nearby. I did speak to the desk a little while ago to get a sense of what was going on, and they were surprisingly active today. They thought it was going to be a bit more quiet today, but the tone was good and volume was good today. So, as always, good to be here.
All those premium harvesters in the audience trying to get their business done before they go away for the rest of the week.
Yeah, a lot of it getting done in futures options now. A lot of play in gas lately with the move in gas and what the news reported as the warm weather in the east and northeast, apparently not up in Maine, but I know for the Bears game they had pretty good weather, and New York seems to have pretty good weather, so it was tanking gas a bit today.
I like it. Save that info, sir, because we're going to dive right on into the trading block.
The trading block.
All right, listeners, you know by now, 301 episodes, you know what those bells mean. They mean it's time for the trading block, the portion of the show where we break down the day's worth of action on the old street, what was moving the old markets today. And it was a bit of an up day on the old street. The S&P and the Dow both closing up about 0.5% on the day. NASDAQ leading the charge up 1.1% to about 44 handles to 41, roughly 41.50 on the day. Aggressive move out there in NASDAQ land. Much of that charge being led by ye old fruit company just lighting up the tape today, up about 21 handles or nearly 4% to close at about 570 even on the day. Almost back at those levels, Uncle Mike, where you sold. Might be time to perhaps rethink those levels. So what was your take on today's action? What were you doing out in Apple today, Uncle Mike?
I rolled up a put spread that I had on there, and so I reestablished my delta level. So now my put spread is at the 560 level. And just looking at, so I woke up in the morning. The first thing that I do is I check my mobile device and see what the pre-market's doing. And then I saw Apple up $15 or whatever it was pre-market. And so obviously I figured it was the China mobile deal. Sure enough, it was. And once it went up, it just didn't have a lot of action during the day so much, but we had a little bit more of a run during the day, but not a lot for an Apple-sized run. So I just rolled up the put spread and reestablished the delta position, got a little bit of position theta going again, and it's one of those things to where I don't mind moves like this because ultimately the account balance goes higher.
So you're finally off the 460 strike, up to something a little bit more, shall we say, reasonable?
No, I still have the 460 strike as the long-term strike, but still we have a bearish calendar hedge in place. So the delta level, the delta ratio is still about 70% delta, if that makes sense, which is where I like it. So the difference is that now I just have to be a little bit more active on the shorter term in case it goes down.
I see. So you're still drawing that line in the sand at 460, and 560 is where you're just kind of doing stuff to pay the bills.
Pretty much, yeah. And well, keep in mind the 560 still accounts for. Let me tell you how many of the deltas that accounts for to give you an exact amount. The 560 put. I mean, I have a pretty decent amount of 560 put spreads in place, so that accounts for 200 of the short deltas on this hedge. Oh, so this 560 put spread is definitely a big part of the downside hedge in the near term. So it's one of those things to where as soon as I smell blood to the downside, I got to adjust this one.
Let me ask you, you're maybe not the best person for this because you probably have a lot of different positions you can aggregate across multiple clients. But, Alex and I have talked a lot on the show about the minis kind of not really living up to up to par yet. Have you ever been tempted to dive out there maybe into hedge some round or some odd lots you have lurking in different client portfolios, or are you still kind of staying away from those things?
Staying away for now. I like the concept of it, but the problem is if it was just my account, I would like it. But so I like the concept for a retail trader, especially at this day and age where commissions are much lower at brokerage houses now than they were 20 years ago. So conceptually, I think they're a great thing. Just that for what we do, I was planning on using them, but then there's too much. If the mini is just a little bit different than not the maxi, the normal or whatever by comparison, that just screws up my basis on things, and it doesn't fit for what I'm trying to do.
Yeah, that seems to be the moral of the story from everybody I talk to these days, is that they love the idea. The execution leaves a lot to be desired still, but the idea, it still has a lot of merit, and if they can fix this thing, then perhaps it shall be interesting down the road. But yeah, you would be, otherwise you might be, it might be tailor-made for you to get some exact hedges on and stuff like that, but c'est la vie. Still not there yet.
Then the other problem is that I'm not going to hedge a client's account that only has a smaller amount of money where it would warrant a mini. Where I was thinking about bringing it into play would be, let's say that in theory someone had 150 shares of Apple instead of 100. I'd do a 1 lot with the big contract and then a 5 lot with the mini, and then just adding the minis to what already had the bigger contract. So that's one of the things that I was looking to do with it, but it's just that when doing so, when the prices aren't exact, it just screws things up too badly for me, and so it doesn't work out. If a client doesn't have enough to have an even 100 lot anyway, well, he's, no offense, but he's not my client. Sorry.
Alex, you said the desk was pretty active on Apple today. I'm guessing it was the typical buying calls to chase those deltas all the way up kind of thing that we see on days like today.
Yeah, the desk said it was actually a mix of everything. You get, whenever anything moves, whenever you get these big moves in the market, you do get literally a whole cadre of people who just come into the market and buy, the little stuff, the short-dated $20 out. And they were doing both puts and calls here today, so there's still a fair amount of disbelievers in Apple. I apologize. That's the big clock chiming the quarter. But the desk said that, they kind of expected to be somewhat of a dead day, and it really wasn't. And I guess that's both the tone of the market and trying to get some stats on how much of this is coming in from mobile devices. I was actually on a call the other day about how much volume we're getting from mobile devices. And before I shoot my mouth off and tell you that the reason it doesn't get as quiet here in the holidays as it used to was mobile, I want to have the exact statistics. But on some days, stuff coming in off mobile starts to look at something like 1 out of 6 or 7 contracts on some of these quiet days is coming in over mobile. But before everybody imprints that number, I want to do a little more homework on it. But it was everything today. Tell you another name, and I kind of don't want to front run, but because we're Chicago-based, obviously, a lot of CBOE was done today. CBOE taking out highs, bumping at the 53 area, and got a big customer base that are former CBOE market makers who hold the stock. And they were active today, some hedging going on in CBOE, some overwriting going on in CBOE, and then there are some people who are doing some selling late in the year to put a little money in their pocket on a good performer. So another active name today.
Yeah, I'm looking here. CBOE not doing more than their ADV, about in line with their ADV, but some activity across the board. People rolling all the way out to looks like Jan 2015 on the 60s, overwriting way up there. Some guy overwriting the Jan 70s at 2015. Well, it could be closing too, but yeah, some longer term paper out there. You're right. I'm sure that's a lot of the flow out there in CBOE is former market makers. I know I jumped in those options quite a bit, particularly when it first listed, because it just seemed so meta to be trading options on the CBOE. Now it's kind of old hat, but it still has a lot of resonance, I think, for the old school market maker community, not least of which many of those still have shares from when those seats were transferred over to stock. Speaking of stock, I know you're sitting on a pile of it across the board, Andrew, because you do nothing but trade underlying over there. Isn't that not correct?
No, we do. We trade actually lots of options. You'd be surprised.
What are these options things you're speaking of?
I know. I kind of am more like it with the equities. I do like trading some options around equities. It's. I think it's a way to make money. I don't know. Call me nutty.
Go figure. So what was on your radar today? Big moves in Apple, big moves across the board?
This was the funniest thing with Apple is normally, this China Mobile thing's been around. We put out a blog on Friday. We're probably one of the few places where the blogs are actually more actionable type blogs where it's just a reflection of what we're doing during the day. But, the upside skew actually kind of went more parabolic on Friday. You had that little downdraft on Thursday in Apple. Everybody's like, a little kind of whiny. We just made highs after that GDP number. But funny enough is that the Apple downside put volatility got smacked on Thursday. So Apple's kind of pulling back and they're, hitting puts and bidding up calls again. So it just looked like, if there was a lot of expectation for this China Mobile deal, people were looking at that as a buying opportunity. It was a pretty, I got a little picture of it on our blog site from Friday, but there's pretty good skew, fair inversion. I mean, that comes from supply and demand. So, we had a position on it for our strategy there that worked out okay, but, just reflecting that. And so the biggest surprise to me was how much of a rally we got when the news actually came out. Normally you get the news and then they sell it off. So I think that's kind of bullish for the fruit company. I have to admit. Yeah. Those 700 million potential customers or 10 million extra iPhones, they might make some money on that.
A lot of names they say buy the rumor, sell the fact, but Apple certainly seems to exhibit that more than others, where they bid it up, and then they crush it mercilessly. And you're right, today would have been a day that would seem to follow suit in that, and yet not so much the case.
Yet Mr. Tusa has to roll his calls higher up because he's got these kind of issues. Roll my protection up instead of down. So I know usually when that is so off the card, I usually pretends higher, but I don't know. What do I know? But it was odd but good.
So some of our savvy listeners who've been listening to this show for a while, they took advantage of the knowledge they've learned here to perhaps leg into some good Apple verticals. They're pretty happy right now.
Possibly.
They're savvy fellows. Send the checks for like the lobster dinners care of the option block. But of course, speaking of all your various blogs and rants and whatnots, you have an interesting rant going on about the VXX. I believe, what was your terminology? The VXX still sucks, or something to that effect?
Exactly. VXX still sucks. Yeah. Yeah, one thing I'm noting, VXX making a low for the year in both nominal number, split adjusted for the reverse split, but also implied volatility in the 30s. I mean, 20s, actually. It actually, in one term here, VXX volatility is 28.63. I think that's the lowest I've ever seen it. Granted, it's, the week of New Year's, and they've taken all the volatility out, all the decay out, but still, it's down there. That is not a whole lot. 28 volatility to hold something for 2 weeks is still, that is low, super low. So I don't, I don't expect it to really stay there, but nonetheless, it also reflects, low volatility reflects generally a perception of direction, whether it's bullish or bearish. Most of the time, volatility gets real low and everybody thinks things are just going to go up forever. With VXX, it's actually usually, I think, the opposite. The vol gets real low and it's just sort of things are normal and the product looks like it's just going to decay forever. Again, the contrarian in me thinks that you would want to own some kind of strangly, straddly type thing in there with the vol this cheap with a couple weeks to go. But there are clever ways to do it. You could surf on over to the Option Pit blog, but I find that confluence of low price and low vol. Generally, when things get to a basically push to a far limit, it's always, for me, makes a more interesting trade, especially when I hadn't had to ride it long the whole way. Makes me a lot more apt to take a look at it.
So despite the fact that it is pretty much garbage across the board, you think it's a cheap shot on some garbage these days, is what you're saying?
I think it is. I think it's getting it's beyond cheap. Again, like we had short vol trades. We closed in a strategy letter, in the last 20 minutes today. But if I wasn't leaving for a week, instead of closing my VXX puts, I would have just bought some call spreads against it and created a super cheap back spread for a ginormous credit. Doing stuff and getting paid for it, I know it's a weird concept. But me taking a week off, I don't want to have to look at anything for a week. So I just don't care for a week. So this will be the week I just say I don't care. When I don't care, I close. I find it better to do that.
Good advice. When you're not around, you can't watch. I think a lot of our listeners probably take that to heart, too. They seem so obsessed with these things, and they want to put things on, even when they're traveling and stuff. If you can't be around to manage it, just take it off. Take a week off. Relax. Enjoy your family. There are worse things.
Totally, because it's good you take a break. So that's what I am doing, although I have some grousing clients saying, wait a minute. I'm like, no. We take breaks here.
They say, I'm paying for that vacation. I'm going to call you at 3 a.m. on your cell phone on the boat or wherever you're going, and they're going to like that.
Exactly.
Clients. That's why I have none. It's so nice. Speaking of clients.
I don't know how you did it. You're the smartest of the three of us, or four of us.
Speaking of clients, Uncle Mike, you mentioned you're doing stuff out there in Apple, but of course you have other holdings, at least one or two. So what else caught your eye in today's sea of green?
Just for the most part, SPY. I left the call side open over the weekend on my SPY diagonal, so I was actually smiling quite. I had a big smile. There was a lot of grinning going on at the office, mostly by me when I was open to the upside on SPY this morning. That's for sure. I'm going to leave it open for another day or two. I mean, I'm at a point now to where we've gained from being greedy the last couple days, so I'm going to continue to be greedy, so to speak. And once we start to go down a little bit, that's when I'm going to put some calls on it. For now in GLD, I'm still just long a put. And I'm planning on adding a put spread to it and sometime by the end of the week, but just to finance the long put. But for the most part, there's really not too much going on except for all the green. No complaints there.
Playing it a little casual these days with that upside uncovered, Uncle Mike.
I
don't know who you are anymore.
Well, I've become a degenerate premium buyer. I try to do either, just try to keep you on your toes.
I've always known that about you, sir.
My minions tell me lots of things about you.
Don't trust those purple minions. They're full of grape jelly. You can't trust a word they say.
Now, my question is, you know what I heard about the minions? They're all requesting Viceroy hats, so they can look like the Viceroy.
That would be a pretty jaunty crew of purple minions with some Viceroy hats.
The minions are all like a foot high with these 2-foot-high hats, though. They look really ridiculous. That's all I'm going to say.
I have a couple gross of them coming in from Hong Kong, and there will be a market in them shortly, and we'll be talking about it.
I like it. Some good tchotchkes for the listeners. All right, listeners, with the promise of some fancy hats on the horizon, we're going to close out the old trading block and keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the Odd Block, the portion of the show where we break down what's happening in the weird side of the options market. And we're going to kick things off with some activity out in Meritor Inc. Ticker symbol MTOR. Sounds like a bad sci-fi channel movie, The Revenge of MTOR. But yes, ticker symbol MTOR closing today $9.64. Up a whopping 18%, or about $1.50. Not surprisingly, they were blowing through their ADV today. They do about 2,500 contracts a day. Pretty hefty for an odd block name, and doing nearly 6,000 today. As you might have guessed, on a day like today where the name's up 18%, that call to put ratio is about 6 to 1. ton of people flocking into calls as a way to get some deltas on. And what we saw today, what we highlighted at least on the site this morning, was some activity in the MTOR Feb 10s. We saw about 700 went up at the time that we wrote this, and about 700 total on the day. All opening paper because there's only 15 contracts on that strike. They went up they were bought, by the way. They were purchased for prices between 50 and 70 cents in some smaller blocks. Looks like, low open interest, of course, is going to be opening paper. We also saw some other paper lighting up the tape out here, too. In fact, we saw about 2,100 of the Jan 10s going up for a variety of prices. Given the open interest on that strike is also about 2,100, that looks like that is probably a close. Maybe someone had overwritten it and was taking their opportunity to take that off as the stock continues to rally. Senior Andrew, what's your take on today's activity out there in MTOR? Revenge of the MTOR.
Exactly, revenge of the MTOR. Definitely some opening longer-term paper and probably closing short-term buy-right paper. You know, they got a big move in the underlying. Calls didn't do much. Note that theme, everybody, that those upside calls went, yeah. So if you're short them, versus the underlying, they probably did really well. And they're just taking the opportunity now to say thank you very much and hit the road and move on to more out-of-the-money calls. But it's a low volatility stock. It's a $10 stock with a 24 volatility. So again, very it's interesting when the volatility gets bid up in the 60s like this in a stock like this. So I think if I was buying it, I would probably be trying to write more calls against it. So I'm not quite sure what the pop was in here today. Maybe Alex has something interesting, but lots of good opportunities to do stuff. Time spreads, things like that, with a bid in some of these options. So again, if they're buying it up in the skew, again, getting a little more parabolic on the upside or the skew leaning up, you get very cheap time spreads for a stock like this. So, and that automotive sector is, it's going gangbusters.
Yes, this is a supplier of integrated systems and components to the OEMs in the aftermarket commercial vehicle sector. And this one, these are pretty much some new highs for this one, at least over the past couple of years. They haven't really been dancing in the 10 level for quite some time. And so, this is a pretty aggressive move here in good old MTOR. And you're right, it looks like there might be some time spreads lurking out there, rolling out to some of the farther off months. Looks like June and then Jan 2015, the 9 and 10 strikes respectively. There's about 10,000 open on each. Maybe someone legging into a nice little time spread there, or maybe just writing a couple of different variations on a theme, choosing a Twas era time stupid out there. But that's probably some of the larger open interest once you get outside of the front month in Jan, which is kind of all kinds of crazy now with all the paper going up. But interesting one. Maybe we'll file good old MTOR in the to be watched, see what's going on, see what's driving this move, and perhaps what is going to happen as a result. Next up, not so much in the sci-fi, but it's still a pretty cool name. Ambac. This is ticker symbol AMBC. Closing today, another one, just seeing some good upside movements. Closing today, $23.15, up about 12.5%, or $2.50 on the day. This is the name that does about 1,200 contracts a day, doing nearly 5,000 today. And this one kind of taking the other side of the coin there. We saw people piling in to MTOR, getting some long deltas through buying some calls, and here this one rallying as well. Saw people blasting out some puts. In particular, we saw someone coming in on the Jan 20 strike. Funny, that's front month now, but it seems like Jan should be so far off. Just one of those ones that's been lurking in the distance for so long. But we saw about 400 going up this morning, being sold, hitting the bid pretty aggressively. So they were probably closing, or they were really, really gung-ho to open on this strike. We also saw looked like some heavy put action out in the Feb 20s as well, about 1,600 of those. Again, that's about on 3,000 contracts open interest there, so that could be closing out some existing OI. But in general, it was action on the put wing pretty much across the board. Looking at the call to put here, is almost the opposite end of the story. It was about 2.5 to 1 puts to calls here in good old AMBC. So people loving to blast out some puts today in Ambac. Mr. Giovinazzi, what's your take on all this put blasting going on out here in AMBC?
The Ambac looks like, it's one of those financial reinsurance guarantee credit companies that basically almost went bankrupt in 2008. And it looks like this was sort of a clients buying stock, buying puts, and then now the stock has risen. So it looks like they're blowing out some of the puts they owned. Now that's sort of taking off and possibly rolling to other puts to lock in money. But I was looking back, and it doesn't have a long history for a stock. So my sense is this probably either went bankrupt or was private and then went public at some point. Because I'm only seeing data back to 2013, but I could be wrong on that. But at least for the current ticker symbol, that's how I'm seeing it. So, but yeah, just a straight. I think these are protective put rolls, to be honest. And the more the stock goes up, the more they're going to do the Tucson do stuff. That's what it feels like.
Next up on the old odd block, we have the return of a familiar name. Haven't talked about this one in a while. This is XLF, of course, the Financial Select Spider ETF, closing today $21.71, up about a dime, or about 0.5%, keeping in line with the market there. This is the name that does some paper, as you might expect, averaging about 170,000 contracts a day, doing roughly half that, about 80,000 contracts today. So it wasn't an overall volume thing that really caught our interest as much as it was one mega strike lighting up the old tape today. We saw the XLF Jan 22s, not the weeklies, the straight up Jan 22 calls lighting up the tape today. We saw 10,000 going up at the time that we wrote this morning. 22s going up for 22 cents, ironically. Then, of course, by the end of the day, a lot more had followed suit for a total of 22,000 of the 22s trading for around 22 cents. Is there some hidden numerology in there, Andrew, that I should be aware of?
22 for 22?
22,000 on the 22 strike for 22 cents.
There might be. I think this, most likely it's closing because it's kind of tickling maybe the 22s. I mean, for XLF, that's pretty aggressive buy right closing, I think, because there's 300,000 open interest on the strike. At the time, though, this was, XLF closing on a at least a near term high, probably 1 to 5 year, 4 year high, something like that. So, maybe people are starting to look at January and go, well, maybe we don't want to be short all these calls anymore, which is something we've seen in a little bit of this upside of this in some of the index curves and stuff where those upside calls are just not as many sellers as there used to be. So I think this is more of the same thing. Just some of those call sellers, those riders are sort of going away maybe for a while. So, which of course, now that we're at all-time highs, maybe it's a better time to start doing that. But, if you had to keep rolling and covering calls up and up and up, they're probably tired of it by now. So
as long as the out-of-the-money call buyers don't go away, because then we had nothing to talk about on the odd block.
Exactly. That's what I think this was. It still felt like call buying to me, but mostly because of, the stock's up and they're looking for more highs. But, I mean, there is 300,000 open interest on this. And, I don't think they'd be – it was on the offers. It was definitely looking like a buyer. And my guess with the open interest there – somebody was closing essentially, but either way, they're looking for higher numbers.
And what you're saying is, given all the numerology, that it was the Masons behind this paper. That's what you're saying.
I think the Masons had something to do with it.
I think everyone knows they're deeply involved in call overwriting.
Correct. That's how they got so big.
Yes, exactly.
They've
That's
been
the
writing
key
calls since 1785.
They figured that out about 200 years before options were listed, and they've just been printing money ever since. They were the original OTC. You went to your local lodge.
We've got calls to sell you.
You went to the local lodge, said, "Hey, I want to buy some calls on these tulips," and they would sell them to you. Those Masons, degenerate premium sellers.
That $8,000 strike on the tulip craze.
Yes.
In 1650.
That funded the whole organization for the next 4 centuries.
Yeah, they were 90% of the open interest on the sell side.
You guys are kidding, but you know the famous story of the book, The Wings of Eagles, when Ross Perot gets his team out of Tehran. He filled the suitcase with money by selling covered calls because he didn't want to sell stock because he'd have to file. So he wrote a ton of covered calls against his equity holdings, took local checks. He also had a part interest in a brokerage house back then, but he wanted to conceal the fact that he was raising money. So he did a massive overwrite to fill the suitcase to get the operators who got his people out of Tehran after the embassy was taken. A geeky arcane piece of trivia about covered call writing.
I can always count on you, Alex, to bring up the arcane minutia. I love it. That's why you have the jaunty
to
cap.
save lives.
Yeah, the geeky and the arcane. Ross Perot. It's a very famous story, but it's interesting. At least to me, apparently, that's the way he raised the cash.
Covered call writing, financing illicit activity since the 1600s. All right, we're going to wrap it up here with some activity going on in Hercules Offshore Inc., a name with the great ticker symbol HERO, HERO, closing today $6.36, up about 4.5% or so on the day, up about 27 cents. This is the name, as you might expect, a little name. Doesn't, as you expect, light up the old tape, doing about 1,000 contracts a day. But blowing the doors off of that today, doing nearly 65,000 contracts in HERO. A good chunk of that. A significant, let's see, 10, 20, 30, about 40,000 contracts of that coming in a pretty sizable roll. We don't see these going up in size too much, particularly in individual equities. This one definitely merited some singling out on our part. We saw about 10,000 of the Jan 8 combos going up, buy, put, sell, call, vice versa, and then rolling on out to the other side of that coin, rolling on out looks like to April. So pretty much a size roll of what amounts to underlying, combo being just synthetic stock, rolling out looks like a sizable long roll out to April. Is that your takeaway from this mega combo swap as well, Senior Andrew?
Yeah, this is just a weird trade. I'm sorry. This is like an odd block special.
They did 5,000 of the April 7s, too. They're legging into a time combo swap stupid.
Yeah, I'm looking at, I see the volume in like the 7 hand or the 7 handle, that's fine. But a lot of the volume in the put side and the 8 handle was new. So I was a little, I'm like, what the heck's going on here? So I think, okay, so they're rolling the 8 calls. That's fine. There was already open interest in the April 8s. And then they create a put spread against it. It all goes up spread, 550 spread transactions. To do what? And it looks like to get long, as I was looking at. Ultimately, it looked like they were trying to get long the April 8 combo and against maybe the April 7 combo, and I couldn't quite figure out, why, what the reason was for the combo. So
this is I love my broker paper is what this is.
I guess so. It was really, really weird. That's all I can say.
I actually left out some of it. There's also Jan 7 combos going up 7,000 by 5,000 times, and then the April 7. So you got this rolling to the 7s, rolling to the 8s. This makes a whole heap of no sense. There's a lot of better ways. This guy wanted to get long out in April. A lot of better ways he could have done it than putting up 60,000 contracts.
Like I said, it felt like because the certain things that are identifiable are mostly the calls are being on the buy side, and a lot of the puts on the sell side for the combos. So it's looking like they want to continue a long position, but Wow. That's all I can say is wow. It just seems like it's an I love my broker trade. That's what we're going to. Is that a new class of trade?
It will be. Hopefully OX got a piece of this one, because this will put you away for a while.
I hope they did. Because the Viceroy is going to buy more hats with the bonus he's get on this 60,000 left. That's all. I can say.
This one really. This would beg some further scrutiny, listeners. Check it out yourself. Hero, Hero, volume across the board. A name that does really no paper to speak of. All of a sudden, doing 60,000 contracts in a really funky combo stupid swap, I guess you can call it, for lack of any other better terminology. This is a weird one. And there was some existing open interest. I can see him wanting to roll that maybe. But yeah, this just rings all sorts of wrong. And to cap it off, someone bought 50 of the Jan 15 10s as well. So wouldn't be a good odd block day without someone buying 30-40% out of the money calls as well.
Oh yeah, you gotta buy all the extra junk too.
Yeah,
you
gotta throw that into the mix, just to round it all out.
My closet thing for 2014 is, if they do allow the U.S. to export oil, first they got to get it out of wherever it's stuck. What is it, stuck somewhere in Oklahoma because of lack of pipelines or whatever? But they're pumping all this oil. If they actually start exporting it, what the value of some of these domestic offshore oil companies and exploration companies in the U.S. go to. And, I think like if you look at the OAH, so I can understand the guy wants to stay long this thing, for whatever reason why he's using those particular option contracts. I don't know, but there could be something in the offing with that old Congress there, maybe changing that, law from 40 years ago when we had the oil embargo and we were a huge importer. So that's a potential theme for a breakout in 2014.
Yeah, we're close to the end of the year here. This might get my vote. I'll have to see. It's pretty fresh in my mind, so I'll have to go back and look. This might get my vote for Weirdo of the Year. This is pretty good.
The we can't figure it out trade.
Yeah, this is a good one. All right, listeners, do your homework. Check it out yourself. Write in. Let us know what you think is going on in this weirdo of a trade. Particularly this close to the end of the year. So many contracts. That's a lot of tax liability there. That's an interesting trade all around. And also a little bit weird. But we have to keep rolling with the show. We can't just keep gazing at Hero. So it's time, once again, for the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, welcome to the Express Block. This is, of course, the portion of the show where Alex takes the reins. I get to take a bit of a rest, and he gets to do so today in the comfort of his own home in his favorite fuzzy bunny slippers. And Alex, can I just say I can listen to you for hours now because this Skype connection. You have never sound so buttery smooth. You have never sounded so buttery smooth here on the old show.
Thanks, Mark. There are advantages to being outside of the OX campus. But anyway, the tone today was good. I was remote, so I did have one conversation with the desk, and we talked about clearly Apple and CBOE being active names on the desk. But the other activity today, the other standout activity today was social networking, and a lot of paper flowing through the desk on Facebook and Twitter, both of which I'm going to say have surprising price action. I don't think anybody would have seen these levels in either of those names. A little bit of LinkedIn today, although it didn't have the same enthusiasm that Facebook and Twitter had. Had some put selling today in the Russell on the desk. But again, that's, bouncing off new highs. And just one interesting observation. I'm old enough to remember NASDAQ 5000, the tech wreck, and seeing NASDAQ up over 4,100, up 40 plus points today. I don't think any of us ever thought it would get back to the 5,000 level, or maybe not in our lifetimes. And again, I'm dating myself, but interesting strength in NASDAQ. Obviously, a lot of that being driven by the activity in Google, the activity in Apple, and some of the momentum issues. But overall, the tone today was good, and I guess the secondary tone was social networking today. So nice day for the market. I expect we have seasonal strength here, which we talked about in some of the earlier shows and then didn't get it until the Fed decided it was going to only modestly taper. So I would expect that for the rest of the year. I'd expect an upward tone and sort of decent paper, except for the days bumping right against the holiday. One other thing I wanted to talk about that the desk pointed out to me today is because we are near the end of the year, please, if you're trading 1256 contracts, and just as a quick overview, 1256 are cash-settled indexes, some of the commodity ETNs. Please be aware of what reporting and what information you have to capture at the end of the year and mark to the market requirements. So just have an awareness of that.
Thank you for that, Senior Viceroy. Now we're going to keep on rolling right on into the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the mail block, and our cup runneth over from the big 300th episode spectacular. I know a lot of you guys wrote in with some questions. Didn't have time to get to all of them on the show last week, so we'll get to some of them, as many as we can at least. Today, going to kick things off. Someone taking advantage of the old Facebook platform. I love it when you guys do that, so we shall, of course, highlight you first. This is from Dylan, writing from lovely and scenic Fort Nelson, British Columbia. I have no idea where that is in BC, so hopefully, I'm sure if it's like the rest of BC, I'm sure it's lovely. This one's for you, Uncle Mike, so get your thinking cap on here. And he writes, I have a question on diagonal spreads today. Is there a good way to capitalize on the long vega these spreads generally have without actually selling the long vega option? I've been looking at using the premium gained in the option in a vol pop to buy, quote, free puts in VIXM or VXZ and extract some of this premium instead of just watching the vol grow and then go away. Maybe a good one for Uncle Mike, as I know he's a big diagonal fan. Thanks, Dylan from British Columbia. Well, good question, Dylan. Kind of an interesting question. You know, you get all that big vol pop from a nice move in the underlying. You got some long vol. It's working for you, but you don't want to take it off for whatever reason. And then now you're kind of stuck. You're getting into that what can I leg into mode to capture some of this premium without actually selling the meat of my spread. Senior Tusaw, you like to do stuff. You're liking more of the diagonals these days. Mr. Dillon wants to know what your take is on this scenario.
Yeah, I love the diagonal and been doing a lot with the diagonals these days, that's for sure. First thing that I want to add to our resident expert on here, Mr. Andrew, what do we think about VIXM or VXZ?
Oh, is that it depends, of course, on what direction. I like, the products. They can be short term good, but long term they decay. So again, you're trading a very directional bet on volatility, essentially. So I mean, VXZ is slowly kind of grinding away like a VXX. VXM I don't trade much. But obviously, I think what it looks like he's trying to do is he buys some probably puts, then he gets a volatility pop and he sells something forward against him and creates the diagonal, which I don't think is bad. What I'm trying to figure out what is his question is there a good way to capitalize on the long vega these spreads generally have without actually selling the long vega option?
He wants to kind of vega scalp without actually selling it.
That's what it's sounding like, yeah. And I guess just the way I look at this is that, number one, if I want to trade volatility personally, I trade the VIX. I'll trade the VIX options. If you want to trade the VIX, then trade the VIX. That's the first thing that's my opinion on it. There can be opportunities in the ETNs like Andrew and Mark talk about. but that's one where typically from my standpoint, I guess I'm just a simple guy. If I like the VIX, I want to trade the VIX, or dislike the VIX, then I'll buy puts on the VIX, whatever the case may be. Now, with that, to kind of add to it, a couple of things that you need to be aware of. There's a lot of moving parts to a diagonal spread. In a diagonal spread, what I'm about to say is a lot, in my opinion, even more true than in a single leg option. A single leg option, it's a six-way battle royal for what's going to happen to the price. You have movement of the underlying, you have time decay, you have implied volatility working, and vega could beat delta, but time decay could beat them all. Either way, it's a constant battle royal that updates every second. And on a diagonal spread, you have to be very aware of that. One thing that I like to caution my clients on, and myself, quite frankly, because you need to be aware of it. If you're bullish and you're long a long-term call and you're short a short-term out-of-the-money call, if that spread goes in the money, then what you have to do is really monitor it, because eventually, if you were initially bullish and put on a bullish diagonal spread, that bullish spread can turn bearish once it goes in the money too far, and you can be punished for being too right, if that makes sense. So that's one thing with which you have to be aware of. The other thing in terms of vol, what I would do on that is, why wouldn't you want to sell the long leg of it? I'm guessing from your question, Dylan, is that you're looking to take on the gain from the long leg due to the vol pop, buy puts on some type of a volatility instrument to protect it from going back down, and then continue to ride out the diagonal spread. I think it's an interesting thought. The first thing that I would do, though, is just make sure that the correlation with which you have matches the volatility instrument with which you're using. So, for example, let's say that you're buying puts on the VIX when you're doing this diagonal spread on SPY, SPX, something along those lines. So with that, I think it's a pretty neat idea with what you're doing. But the thing that I would highly recommend is make sure that you have the correlation to do so. The other thing to mention, and Mark just puts this in our chat box here, you need to make sure that you have extra capital on the sidelines to do this. So the thing that I'll add to that is free puts are never free. There's no such thing as anything that's free. There always has to be something that's paid for it in one way, shape, or form. So like the idea, but the main thing that I would caution you is make sure that the VIX, the volatility instrument with which you're going to use, has the right correlation to the underlying with which you're trading it.
I love that notion of the free stuff. Just because you're playing with house money doesn't mean your broker sees it the same way. You still got to have that capital. Oh, that position's up, therefore you can take that and buy more stuff. It doesn't necessarily work that way for free.
Right, but it makes sense. Like, see what he wants. Like, so he buys calls. Let's say he's buying calls and VIXM and then VXE. He makes X dollars on them, and he doesn't really want to sell them because his volatility is going to come back in. So he buys the puts against them. So what I would say then is, okay, you've got a gain and you buy a put to lock in the gain. The easiest way to do it is to buy a put to lock in your deltas, just go delta flat on the run. That way, if volatility continues to go up, right, you're going to lose money on the put that you just bought to hedge the deltas, the vol delta you have. But if you keep ripping, you're still on the call. So what you do is you're choosing to buy options instead of really a diagonal. You actually trade the delta dynamically using the gamma of the option that just keeps generating more volatility delta for you, essentially. So you might, in this case, you actually don't sell another option. What you do is you continue to buy at the money options, and what you do is you sort of build, for lack of a better word, just a whole slew of puts as the thing goes up. And then when the market comes back down, you could have maybe 2 or 3 long puts against your one long call. And, if the bottom flushes out, you can make a lot of dough on the downside. That's your chain, but that is more like a dynamic hedge with delta type of trade, but certainly can be done that way.
There you go, Dylan. A lot of different takes on that. Great question. Glad to hear that your diagonals are working out for you, and nice to have some quote unquote free money to buy some puts with. Not a bad problem to have when you're trying to figure out all the different ways to spend all that money you're making. There are definitely worse problems to have. A lot of other guys wrote in. I'm not going to have a chance to get to you. I'm sorry, but we're not going to be doing a show later this week, so you have to hold on your horses a little bit longer because we kind of have to wrap things up now. But we'll get to you on the next upcoming show. Be patient. We have a lot of great questions, and we appreciate you guys taking the time to write in. But now we're going to roll on ahead. But that's pretty much all the time we have for the mail blocks. Also, all the time we have for this episode of the option block. We can dive into an around the block, but I think we pretty much all agree right now. Not too much vol on the horizon. Anywhere, any way, shape, or form in the near future. So before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods that may interest you, the listener. Starting off with you, Signor Giovinazzi, what's cooking in the land of the pit?
As far as trade goes, we're just looking to close out the end of the year. We were unwinding positions. Apple finished some shortfall today. Still a little long the index, probably for the Santa Claus rally. But other than that, that's about it. And then looking forward to taking a week off and moving along till 2014.
Thank you, sir. You may now go about and enjoy the rest of your holiday season. Where are you going on vacation?
Nowhere. I've got family here, and I actually get to do in Maine. It's I can go skiing or skating or pretty much anything, just not very far from the house. So I just need to not do other stuff.
Just be sure to take that main road. Otherwise, you're pretty much on a cart path or like a donkey path, and then you're stuck.
All right, I'll see you guys later.
You take care.
Merry Christmas.
Merry Christmas, sir. All right. Oop, he's gone. So, and Senior Tusaw, what is cooking in the land of RCM Asset Management?
The chestnuts on the open fire. We're getting excited. And, not a lot this week, but like we've been hyping for several weeks now. The January schedule is close to finished, and we're excited about what we have coming on in the new year.
I like it. That reminds me, I need to stock up on some chestnuts before the week is out. So thanks. I'll put that on my shopping list today. And last but certainly not least, Senior Viceroy, what is cooking in the land of OX education for the rest of this year?
2 last webinars, both next Monday. Monday the 30th, streaming charts and put selling. And just want to reiterate, if you're going to do some tax planning for the year, you need to do some tax selling. We're in about the last week to do it. And if you are 1256, please understand the 1256 rules and what you have to market. And other than that, happy, healthy Christmas to everyone.
All right, and on behalf of Uncle Mike and Alex and the Rock Lobster and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show and for making it such a success in 2013 and for hopefully continuing that fun and success in this wild ride into 2014. Don't worry, we're taking the rest of this week off, but we'll be back with one more show in 2013. So tune in next Tuesday, December 31st, New Year's Eve, for our final show of the year, and then we'll see you back in 2014 after that for a whole host of new Option Block episodes.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.